Okay, everyone, welcome back to episode 16 of Beyond the Headlines with myself, Michael Noss, and Steve Gomez, where we just take a look at what happened in the market this week from a headline point of view, but as quantitative and systematic type traders who like data over talking heads, we're going to go under the charts and take a look and see what's happening actually with the individual companies. We got some interesting news today. Definitely, there's a big PSA, which I'm going to start with for all you Windows users. So make sure you stay tuned for that. There was a giant attack that happened that you guys may be vulnerable for. So definitely stay tuned there. We're going to talk about Kodak and some interesting thing is happening with that company that I think when most people hear Kodak, they're like, oh, they're still around. And Hertz, which is another company, I guess, that went bankrupt recently and it came back. So a lot of guys coming back from the dead, which is super interesting. So without further ado, how was your week, Steve?
Good. It was a nice midweek break. Actually played golf with the guys and Jake at a course that was like it played as hard as the U.S. Open, so it was extremely humbling, but it was fun. And then I'm going to be off Monday, Tuesday next week, so I got a 4-day weekend, so I'm kind of excited. It's Friday.
Oh, good for you. Yeah, that
Yeah,
I gotta say, we looked into it because we were like, it's really weird to have a mid-week market break like that, but I guess it happens 4 times a year. I gotta say, I
yeah.
like it.
July 4th, December 25th,
Yeah.
dates like that.
No, I gotta say, I'm a fan. I like the you work for 2 days, you take a day to recover and breathe, and you work for 2 days. I think it's fantastic. But
I love it.
all right, guys. Oh, we also have some chart requests, which we'll get to the end finally, which is great. We love those because it gives us more stuff to talk about with you guys. So, first of all, I'm going to start here with this because, again, this is a little bit of a PSA for any of you Windows users as well. A pretty serious vulnerability was picked up a couple days ago, uh, about this time, I think last week, with Windows. So, if you're on a Windows operating software at all for from Windows, I think like 7 on, make sure you go and you update. You should be on 10 or 11 just for security, but essentially from my layman's point of view reading these articles, what is able to happen is if you are on the same Wi-Fi network as somebody who is a hacker or some sort of malicious actor, they can send code to your laptop and run it. So it could be keyloggers, it could retrieve passwords, it could be ransomware, it could be whatever, but it's just completely and utterly detached. A takeover attack is what it's called, which means generally speaking, when you get hacked, it means you've clicked on a link or you've installed something or somebody's come to your computer and put something in. There's some sort of physical contact that has been made, some sort of I agree to this, click yes, install this thing that has happened. In this case, doesn't have to do that. If they are on the same network as you, you can be attacked. So again, be very careful and just make sure you run an update because at least there is an update. So sounds pretty serious because it is, right? Windows is still, I think, 70% of the overall PC market. So you would expect, just to go to kind of our theme that the headlines don't matter, that when that came out about a week ago, which would have been right in this area, that Microsoft would have been in trouble in some sort of way. But since then, we've just been screaming higher. And as of today, we are kissing all time highs. So again, just to show that even what could be a colossal problem when it comes to you as a company, sometimes it doesn't matter, right? The stock just keeps pushing up. Now, looking at this stock, it looks absolutely fantastic to me. We had a nice breakout of this zone right here. You could look at this and you could say bad news comes out, stock pushes higher. That's generally speaking, if you're going to trade news, you're going to look at that as a good thing. If they can't keep it down on bad news, then if some good news comes out, maybe that will push it as well. Not a lot of technical analysis to do on this. I'll get Steve's opinion here in a second, but when you're hitting new all-time highs like this and you're breaking out, there's really, from a TA point of view, there's not much you can do. A little bit extended for me, maybe a short-term break over this, 4 or 5 day consolidation. But Steve, what do you think of Microsoft hitting new all-time highs, even though they had a massive hole in their system that everyone found?
Well, one, thank you. I did check my system and I am up to date, so I would recommend doing that. Two, you're right. I think the technical analysis you just throw out the window right now. The market is just in full uh, liquidity mode. They're just nothing matters. And I think, I don't know the axiom, but I'll just try to coin it. I mean, when bad news doesn't matter, that just really tells you the underlying strength of the market. I mean, you just kind of pop in and dropped a little litmus test in the water there and looked at it. And wow, that didn't phase Microsoft. So I should not be bearish. That's for sure. There's nothing that can stop technology. The Nasdaq, giant component, obviously, of the Nasdaq. Semis, they've led the way, and they continue. Well, they don't continue to lead the way. I mean, we're not going to talk about that today, but we did have a giant reversal in semis yesterday. But on topic for Microsoft here, the point being, headlines don't matter. If you woke up that day and you said, "Oh my God, the market's going to hate this. I'm going to sell my Microsoft," then you're not doing it right.
Yeah. And it's why trend trumps everything, right? I think this would be a completely different story if this came out during, you could say, we can switch to the monthly chart here. If this came out during the bear market in through here where Microsoft had, I think it was like a
Mm.
40 or 50% drawdown, in the market, and through this period of
During,
time, yeah,
yeah, a negative sentiment period. Uh-huh.
yeah, then I think that would have been the time that you could probably could have hit the table short and made a few bucks there. But as this thing is making new all time highs and just like Steve said, just kind of a runaway freight train, yeah, you don't pound the table on bad news. What you do is you look, and if it's responding well, which it is, then I think you take that trade from there. So again, that was more of a PSA because it's not really reacting to that news at all, but just a good
It's a
shout
good
out to all those
example
people. Yeah.
of the headlines not matching the chart. So it doesn't matter what you think. It just matters what the crowd thinks. And right now, the crowd is not upset by anything. I mean,
Yeah.
you could probably, detonate some sort of a crazy paint bomb in the middle of their offices and the developers, and still go higher.
As long as you're making AI, you're still going to go higher in this market anyway. So next is Kodak. So again, just shocked that this is a company for. There may be some Gen Z watching us, but Kodak used to make these things called cameras, and that was before they were attached to your cell phone. You'd actually have to carry a camera around with you, and they would have film, and you would have to go get that film development. It's this whole kind of gone age, but the company still exists and is still around and is a little bit interesting. So, Steve, why don't you tell us a little bit about what's going on here with Kodak and why it's popping up in the news here?
Yeah, and again, growing up Gen Z, we used to just drive through this photomat drop-off thing where you drop off your Kodak canister, and some random stranger would look through all your pictures and organize them for you, and put them in an envelope and send them back with a goofy look on his face.
God, that'd be a fun
Not
job.
send them
Imagine
back.
the crazy
Uh,
stuff they would end up seeing.
I actually, one of my neighbors was the gentleman who started Photomat. He created the franchise and he sold out. He didn't ever run it, but it was interesting.
Mm.
So let's get to it. Yes, Kodak. Your grandparents were investing in Kodak and the Dow probably back in the day. But the point is they don't just make film. I mean, they're a chemical manufacturing company. The reason I'm going to show you and talk about it is because it's actually the trade of the week. It didn't really materialize the way in which I had hoped. I'll tell you why. This blue line here was a little bit lower down here around
Oh,
540,
let's
and
get to the I'm sorry, I'm just still on the news screen. Let's just go through the news first, and then we'll take a look at the chart. So,
okay,
sorry, I forgot
good
to
point.
read that off. But yeah, that essentially, as far as we can tell reading through this article, they have $7 billion in pension funds for a $300 million company. So over 10 times the value of the company itself is in pension funds, and there's some sort of way that they voted so that they can start to manage that money in some sort of a fund structure. So, maybe this old dated, chemical company may be switching into some sort of investment company or hedge fund or something like that. But that puts it in the news. Now let me get over to your desktop, your trade here, Steve. Yeah. So this was the trade of the week, which I guess we should just promote for a second because this is awesome. This is something Steve
That's what I
puts
was.
together. Um,
Yeah, that's what I was mentioning. Is like back here, a few days ago, that was really what today looked like. And what do I mean by that? It means this red line there, that is the 20-day SMA.
Mhm.
And I was publishing, actually a little bit higher. I was publishing the trade of the week, trying to eyeball a good decent pullback rather than, hey, let's buy another push. Because look what happens when you buy a push of a breakout. It's happy for about a half a day, and then it's miserable. And that's not always the best idea. It's the easiest trade to follow, but not always the best. So what I did is I tried to gauge what would be a healthy, decent pullback. And the 20 SMA is going to continue to move higher. So here we are on Friday. This was called on Monday. All right. I was expecting this red candle here to pull back deeply down to the blue line. It didn't. It held, popped back up, and then gave us kind of the second mouse got the cheese, testing that recent low. But the point is, it bounced where I expected it to at the 20. So being a trader, I am long Kodak. I purchased Kodak today. I'll just show you in the intraday here real quick. Right here. I mean, my alert went off, and I said, it's time to nibble. So 1/3 position was taken. There we go. We broke through this declining 10 SMA. I'm now in a 2/3 position. Depending upon how we close, I might even take some more home. But if the candles and the price were to close as is, it's a nice wick, a nice bottoming tail right off that 20. I'll zoom in for a bit more perspective. And Michael can duck his head, and you can see the weekly chart has been higher in the past. So also a lot of resistance kind of popping up here. So long-term protracted range might be threatened here soon. I just want to finish by saying I do not want to be the buyer here. I always want to be the buyer here, because in hindsight, that's your trend line. You're buying at the low end of the trend. It's not always intuitive, but that was the concept. So we don't know what this company is going to turn around and do with their $6 billion in cash. Michael says they're going to turn into a hedge fund. Who knows what type of fund? They're going to be able to invest in literally whatever they want. And I'll even add this extra layer. I think if the USA is interested in pulling back manufacturing and bringing it back from abroad and bringing it back. There was a lot of scare events during the pandemic where we didn't really have chlorine or certain simple medications that might have been available uh, here if we had made them here. So we kind of realized our supply chain is a bit sketchy in certain periods. And so a company like Kodak, with all this capital development and money and cash, they could turn around and start making some contracts and get back into the manufacturing game easily as well. So there's many opportunities for this stock, but all I want to do is surf the wave of price action. And today was a perfect entry. I might even do a video on this as the trade of the week, kind of a trade of the week part 2.0, and update it. And, because it didn't trigger the way we wanted it to, but now it's kind of in play a week later.
Yeah, and that's a theme too that's interesting that I think is happening worldwide, right? The pandemic showed a lot of countries that, hey, kind of makes sense to make stuff at home if you can. So that's an interesting look there. A nice kind of push through here. And this is why one of my favorite stats that we have on Trade Ideas right here. It's called days to cover. So everybody in the world has short float percentage, and they look at it like that and they say, okay, there's 8% short. That's not crazy. But what days to cover does is it takes that amount of shares that are out there in the short, in the float that are short, and divides it by the average daily volume. So this is basically saying if all of the shorts right now, if every trade that occurred on average, there's, what, 3, 4 million shares a day change hand in Kodak, that means there's about 20 million shares out there that are to borrow. So it's a way to take this percentage number that, again, isn't a huge percentage short, but it's to say, hey, if these guys start covering, they're not going to be able to do it in a single day. If you take something else that's like very, very heavily traded, that's also heavily shorted with, say, GME, where, the short float's 15%, so double Kodak, that's only 0.37 days to cover, which means all the shorts could get out in a single day very easily with a lot of room to spare. But Kodak, you're talking you're talking over, sorry, a week of trading that would have to be buying and buying and buying to get out of this position, which again is very, very interesting. I like this as a metric. You can scan for this at Trade Ideas. And if you're seeing this and you don't get the trade of the week, you should. It's for free. Steve combs through a whole bunch of charts on the weekend. He comes out with one idea that he thinks is interesting. We send it to your inbox completely for free. So you can go to tradeIdeas.com and sign up for that. It's a way for us to kind of start getting in contact, and hopefully, if you like what you see, we can do some more business down the road. But definitely give that a shot. From my kind of longer term point of view here, when it comes to looking at the chart, I did this whole presentation analysis on stage analysis. So Stan Weinstein is very famous for his stage analysis, basically breaking up the market to accumulation and then an uptrend and then distribution and downtrend. This to me looks like a whole lot of accumulation, right? Kodak stopped going down in the beginning of 2022. And ever since then, it's just been moving sideways. Basically, this just means that companies have reached some sort of fair price. And, there's some sort of underlying bid, at least right now, at about $3 a share, 350. So when it comes down, there's probably some institutions that are doing all the math on fair value of the security. They're buying it there. This $6 seems to be a pretty big resistance zone. So I like Steve's entry as opposed to trying to buy it as it gets through this major resistance area. You're getting a pullback price, and then if it breaks through $6, and then you get this kind of short squeeze that starts happening, room to eight or so, and that's a percentage gain. That's amazing, right? What more do you want than that? So it's a good look. It's an interesting story. I love to see old companies kind of come back from the dead like this. So good for them, right? Kind of give it a shot there. Speaking of old companies coming back from the dead, what a segue there. Hertz, and this was one of the original, for those who didn't trade the actual meme stock craze. This last GME thing was kind of a little bit of a flash in the pan, but this was one of the first where all of Reddit got together and said, hey, we're going to save Hertz. And they were actually able to do it, where this company went bankrupt and it went to the pink sheets, and they bought enough of it that the share price went high enough that the company could raise some money and brought itself completely back from the dead with a partnership they had with Tesla and all kinds of stuff going down the road. So the idea, what's happening now, is that Hertz has been in trouble for a while. I think we mentioned last episode, it's selling all those Teslas back. It didn't have any luck with those.
Doesn't
So,
sound like a good partnership to me.
no,
Yeah.
it saved them at the time, but yeah, they're in trouble. So anyway, they went back and they raised $1 billion as they're going to refresh their entire fleet. So means they need to sell a bunch of old cars and buy a bunch of new ones and kind of start again there. So if we go to the chart and we take a look at Hertz, it's a really interesting, especially a monthly chart, right? Because you had this kind of complete collapse, went all the way down to near zero when it went bankrupt, reissued more shares, came back out into the market and relisted. And then ever since then, it's been falling apart again. So this is kind of looks like it's a bit of a last shot for them. But hey, $1 billion, even though it's bonds, it's not, I guess I should reiterate. When we talked about GME raising money, they raised equity, which means they just have that cash and they can put that in the bank account and they can yield 5% now and they can do whatever they want when it comes to investing. This is a debt raise. And just like your personal finance, it's basically they went to the bank and they said, we need a loan. And the bank said, well, you're not a profitable company. You're not doing very well. So we're not going to give you a good rate. So this is a really, really last shot because this is going to constantly tick down on them. So this is the last shot for them here. So it's in a downtrend. We are getting a big push up. We got a bullish engulfing candle on yesterday's action. I think that this might be a place to take a shot, but I think that has to be about it, right? If we take a look, we're above the 10 SMA now. We're above some key moving averages. We're trying to take a shot at it here, but in my opinion, this is one of those. My old trading mentor would call it a basement window trade. If you're going to take a jump, if you're going to
Mhm.
jump out a window, might as well be a basement window. If you're reading this headline and you want to take a shot, I think you just need to know that this is a debt raise, which means the company is worse off financially unless they can turn that money into revenue really quickly. Yes, you're getting some follow through. It's got a massive short float of 25%. Just know that you're really, really fighting the trend here. So not something that I would take, but if you are and you're looking for a little mean reversion, I think you're long at 4 and you got to stop if it breaks this low right here. So what do you think, Steve?
Well, funny enough, I'm doing my part. As I said, I'm traveling. And guess what car rental company I'm using tomorrow?
Oh, you're using
And
Hertz.
we can call it a channel check, something that hedge funds are really good at.
Mm-hmm.
What I have here is three recent texts from Hertz. They want me to not use a human being at the front counter as much as possible. They're trying to get me to just check in online and just get to my car and go. So that tells me they're and by the way, I've used them all the time. This is new. I've never had this prodding and pushing to not take the bus and show up to where somebody they have to pay to stand there and type in and give me all that stuff. So it's an interesting move. I can see right off the bat this, an attempt to try and cut costs, say efficiency, whatnot. I'll let you know how it works out. I haven't clicked into it yet, but they don't want me going anywhere near a human, which is a cost-cutting thing. So there you have it. Right on from the horse's mouth. They're trying.
Well, they do have revenue of nearly 10 billion, right? They're losing money every quarter, but they have revenue of 10 billion, which means that if you can cut down on your costs, then maybe you can turn the
Hmm.
company profitable
Yeah.
just by doing that. But that'll be interesting. It'll be an interesting
Hmm.
channel check going forward.
I'll let
Again,
you know how it goes.
yeah, for me, when I see a trend like this, I'm like, I'm not getting involved until something
Technically.
happens. Yeah, like Kodak, I think is a perfect example of this, where I'm not going to get involved in this thing the whole time that it's just in this downtrend chopping around. But after you have this big spike and then a consolidation and then it starts to move again, well, now you're kind of switching into an uptrend mode and it's more of a time to take a shot. So that's what I'd want to see on Hertz is a rally and then a pullback that makes some sort of a higher low that shows that there's bidders in at a higher price again before I'd get involved in that. So
Start building base camps is what I like to say.
yeah, exactly. As opposed to just, again, for a short-term trader, you want to take a shot. You think there's, some shorts are going to cover on the news, go right ahead. I just not something I'm interested in. So we have some chart requests. And we're going to start here with XLF, which was one of them, which is just for
Mm.
those who don't know, XLF is the financial sector, mainly weighted to a lot of the big guys. I know a lot of people look at XLF and how well it's done and say, well, how can this happen when all of these banks are doing poorly? But those are all going to be listed in KRE, which is the regional bank ETF, which is your little guys. XLF is going to have a lot of Goldman Sachs and JP Morgan and Wells Fargo's, these big names that have been doing very well. Uh, but banks nonetheless. So for me, I just look at this and I don't really see too much. This is kind of a wait and see chart for myself. If you
Yeah.
connect these lows and then you kind of right connect these recent highs, we are getting tight in through here. It would if I'm going to be trading this, I'm going to say, okay, well, I'm going to wait for one of these trends to break one way or the other, and I'll get involved that way. And right now, it's kind of choppy and uninteresting to me. I think what you do if you were interested in getting involved in financials, the gentleman who commented mentioned he was in FAZ, which I want to talk about for a little bit soon. But I think you wait until this consolidation resolves, and B, you make a list of whatever stocks you like the best. If you think JP Morgan looks good, if you think Wells Fargo looks good, I would just go through all the constituencies of the ETF and try to figure out which ones look the best to you. Now, the one warning I wanted to give before I hand over to Steve on these levered instruments. I think the gentleman was looking for XLF to sell and was long in these FAZ. The one thing I always want to caution is that these are designed, and it says right on their website, they are designed for short-term moves only. If I'm, for example, long a bunch of things and I'm going into the weekend and I'm a little bit nervous and I want to pick up some hedge, this is a great way to do it, to hold it for a couple days, maybe a week. But these instruments will go down over time, right? If I go out here to the monthly chart, you can see what happens to this security over time. Now, the reason this happens is because how they get the triple leverage is with holding derivative by holding derivative contracts. And those derivative contracts degrade over time. They buy options and they buy futures. And with those derivative contracts over time, they're going to degrade, they're going to expire worthless, they have to buy more. It's not a bug, it's a feature. It's how these things go drop under one, and then they have to reverse split, and then over and over and over again. That's them working exactly the way they're intended to work, because they're not meant to be hold for a long period of time. So if you are bearish on financials, I would say, again, look for individual names to short the actual XLF, try to find the higher up on that leverage scale you go, the faster the degradation would be. So maybe try to find a 1 times reverse or a half or 2 times reverse or something like that. But again, for tactical short-term trades, these things are absolutely fine. For long-term holds, if you're thinking of holding, I'd say more than a week, then you should probably do something else, buy puts or sell calls or do some sort of trade. But I just want to give that warning again to the gentleman who asked, but then also people who are looking at this and trying to figure out how to play it. For me, it's kind of just stuck in a range. So what do you think of XLF there, Steve?
Well, come over because I was in this trade and I had to cover yesterday, so it's a perfect time for him to ask. I'm not in this trade anymore, and I'm going to explain to him why. Okay. I leaned on this area right there, big solid 50-day. It closed through. All right. I drew a line in the sand at the 20. This is how you want to short. All right. You want to short the bounces. I kept feeling that compared to the NASDAQ and the SPY and anything else, if I'm going to hedge anything or if I'm going to try to play anything to the downside, XLF was lagging. And yes, and the financials and the banks, whatnot. But I got to let the chart tell me the story. And again, it was only going to be a 2 or 3 day play, which again is my wheelhouse. I love the 2 to 3 day moves, and those are perfect for the levered ETFs, your
Mhm.
TZAs, your FASs, whatnot. So I was in FAS. Why did I get out yesterday? Because of this. I told myself this was my second ad here at the 20. It needed to spike and then show some weakness into the close. I kept telling myself, wait and see how it closes, wait and see how it closes. Well, I didn't even really get to the close because late in the day, this thing was showing me it had no intention of putting in a little small wick, like taking out yesterday's high was what I was looking for, and
Yep.
then a reverse. I said, I'm not sticking around for this green candle because here's what's happening, guys. There is a giant game of rotation going. All right, what happened yesterday in the semiconductors? You were selling semiconductors, and you were buying financials.
Yep.
And then you'll stop buying financials, you'll start selling financials, and you'll start buying small caps. You'll start selling small caps, and you'll start buying commodities. It's just the way the baton is being passed right now, and it's indicative of a healthy bull market. It's just called rotation. Nothing goes up forever, and the smart money managers are the ones that are being able to say, hey, looks like this would let me move some money into this sector because this one's lagging and it's more than likely to catch up. So long story short, XLF I felt was not ready to roll over. It was essentially just the weak hand and the next layer of rotation. So I was in the same trade as you, sir, and I am out because of that green candle on Thursday on XLF. I want no part of it. Now we're filming this halfway through Friday. We don't know how it's going to end when you see it on Sunday. But I decided yesterday I was wrong. And so I took a small loss on those two fade the rip type of entries, one there at 141 and one there at 41.30.
Yeah, and I just want to hit on that a little more because I think you covered a topic that might be worthwhile to chat about. We're going to go in. We had another chart request on crypto. We'll go into those in a second. But that idea of rotation and, people who are new to trading, especially if you started trading during the bear market and then out of the bear market came this AI play that everything rallied behind. What Steve's talking about there when he means rotation and how healthy it is that eventually, if you are a hedge fund manager and say 10% of your portfolio is NVIDIA and NVIDIA goes up 500%, well, now 50% of your portfolio is NVIDIA, no investor is going to pay you just to sit there and hold your entire portfolio into NVIDIA. They're going to say, well, if that's all you're going to do, I'm going to do it myself. I want you to be out there finding stocks. So eventually, some of that money has to come out. People have to take profits on that. The question and the thing that you should always be asking yourself when you're in a bull market that's heavily concentrated like this, there are some people that saying this concentration is bad. We're going to crash. It's the end of the world all over again. That's in my opinion, loser talk, right? The winner talk is, okay, eventually they're going to sell these names. And if the market is healthy, they're not going to sell the names and raise cash. They're going to sell the names and they're going to put it into other stuff. And that's what creates this rotation is people make money somewhere. And in bull markets, they take that money that they made and they invest in other names. In bear market, they take that money and they move to cash. And that's the main difference. So what Steve's talking about when he showed that, right, semiconductors were down big yesterday and financials were up is just people are taking healthy profits on things that they've made a lot of money on, and they're trying to say what's next, and they're going into financials. For whatever reason, we don't really care. It's just the fact that when you're looking and you're seeing some of these darling sectors sell off and you're seeing other sectors do well, that's something you have to take notice. Like today, I'm just looking up at my screen. This is something great we do at Trade Ideas with some of our scans. I see XBI up there. So biotechs look like they may be in play. And by doing this, you can actually follow the institutions that are selling. And as we mentioned, a lot of these institutions have mandates where they have to be long 90%, 95%. They're not allowed to sit there in cash. They have to buy something. And like Steve was mentioned, looks like they're buying financials. Maybe they're buying biotechs. Maybe it's going to be crypto. Who knows? But that's where a lot of money can be made in a bull market is saying, where are you guys going next? Let me try to get there at the same time that you are. So the last chart request we had here was kind of crypto and Coinbase in general. Uh, Now, this was one of the charts that I was kind of the most excited for, but I never took a trade on in a while, and I'm actually looking to get back involved if we hold, but has kind of broken. And my idea here on Coinbase was actually, let's go to my desktop here. So I need some anchored view apps. So if we go to Coinbase, what was very interesting to me is that if you drew an anchored view app from this major high right here, that was price was sitting right on top of that for a number of days. And then if you drew an anchored view app from this major low right here, it was all in the same place. So it looked like there was a
Mm.
lot of kind of concentration of buyers right here. So I actually, on my Substack and Twitter, and I made a YouTube video about it, that I liked Coinbase if we could move off this level, right? Always, you'll notice pro traders, it's always an if this, then that. Amateur traders, it's always, I think this is going to go to the moon. So, I was looking for a move off that. We didn't get that. If we reclaim this over the next few days, then I think it may be back in play. But right now, this kind of looks a little bit broken to me. The mentioned, I think it's going to be entirely a move on crypto as a whole, which is pulling back as well, right? There was the same kind of thing. If you anchored a view app from this major high, we were holding there for a while. We broke on that. If we use Ethereum or ETHE, that's kind of what I want Steve's opinion on is Ethereum actually seems to be dramatically outperforming Bitcoin right now. So this is the Ethereum chart. But if we go back to IBIT, you can see IBIT has broken down from this level a while ago where Ethereum has been holding strong. So that's just basically my opinion is that Bitcoin, you have to stay away until it retakes some levels. Coinbase, you have to stay away till it takes some levels. Ethereum's kind of interesting to me because I'm one that I like to trade relative strength, which means I always look for who's the leader, especially in market pullbacks, and those are the guys I want to hop on when things recover. This Ethereum holding on and actually doing okay is interesting to me. So if you are bullish crypto and you want to get involved in crypto, the way I'm going to play it is I'm watching Ethereum. If we get some sort of a push out of this base, you could call it, $33 on this ETH that's going to be an ETF at some point soon. I think that's where I'm going to get involved. And then, 30, 31, that's the exit there. So what do you think of the crypto world as a whole there, Steve?
Well, the coin chart was really the only thing that stood out to me as having some sort of technical significance. I agree with you. Ethereum is the relatively strong one. What I don't like about coin is I've got a 50-day moving average here on mine. You've got my screen up, so you'll just
Mhm.
see that blue line has been breached. And it pretty much was the same lines that you were drawing, for the anchored stuff as well. So it broke both of those purple anchored lines and found support at the 50-day moving average yesterday. But now all of a sudden we just overnight we're just bleh, below the 50. So
Yeah.
when things get under the 50, I don't like it as much. It's like a big red flag that kind of just is a first check that I might just stay away from in general. So let's see. It's Friday, like I said. If it can close, if it could bounce back above and close above the 50, COIN coin wouldn't be as bad. But if it lingers down here and closes below that 50, it's kind of flipped the table a little bit on me.
Yeah, uh, sorry, 1 second there. Okay, we're back. Sorry if that was a little jarring. I don't know what the edit's going to look like, but my dogs were just barking because I got a pool delivered, and of course they want to fight the Amazon delivery guy that delivered it. But that's dogs. So, last point I want to make about coin before we move on and kind of close the show is that the reason I like Coinbase now, and I get asked about the Bitcoin miners all the time. And the reason I'm not interested in the Bitcoin miners anymore is because I worked for one, so I understand how hard of a business it is. If you just like, again, I'm not a financial analyst by any stretch, but Coinbase makes money. They have a lot of cash on hand. They don't have a lot of debt. It is a very low capital intensive business because yes, you have software developers and security personnels, and it's very security intensive because their job is to hold on to your Bitcoin and not get hacked. But if you are a Bitcoin miner, you have to have GPUs, you have to find a way to power those GPUs, you have to find a way to cool those GPUs, then they break and you have to pull them out, you got to put new ones in. It is very physically intensive. Like you actually have not cybersecurity individuals. The Bitcoin miner I had to have a fence around it with men with guns because you're sitting on hundreds of thousands of dollars of hardware and then even more in actual physical storage of crypto that people could take. So it's just they are very hard businesses. Now, I think
There's,
yeah, go
I'm
ahead.
sorry.
No, go ahead.
I've given up on them. I've tried. Look how many spikes are in that mar. It's a porcupine.
Yeah.
Riot is the same thing. Neither of these two names can get out of their own way. They can't even chew their way out of a dry paper bag or a wet paper bag, however the saying goes. So I have given up on them, and I agree. There is a story behind that. The story is their margins are gone. Their
Hmm.
margins are gone. Having security, energy, all that. They're it's not a good business model anymore. And so I have literally thrown in the towel. I watch these things come through my high low ticker. There's about 4 or 5 other names, and I just kind of go, no thanks.
Yeah. And I think it's just the business economics. And before, I think the price used to be really heavily correlated to crypto because there was no other way for people who are trading stocks to get involved in crypto. But now you've got ETFs. So if you want to bet on the price of
Mm,
soon Ethereum, they said that those ETFs will be out in the summer, and Bitcoin, you can do that.
mm,
You can just trade the actual instrument. So now these securities that were benefiting off being proxies for ETFs when we didn't
right.
have ETFs, they're kind of
Let's
suck. So
play
the only one that I think that kind of still makes sense is MicroStrategy. If you don't want
pure.
to trade, Coinbase for whatever reason, MicroStrategy makes sense because I've asked like 20 traders. No one has any idea what this company does except hold a bunch of Bitcoin, right?
Mhm.
They're losing money as a company, so that's a drag. I don't like that. But if you want some sort of direct kind of correlation there, then that's something that would make sense. So thank you guys for coming by. Always appreciate you guys hanging out with us on your Sunday. Any closing thoughts for the people, Steve?
No, just go ahead and drop some more chart requests if you want. Just right there in the comments and like, share, set the alarm, tell your friends, and we'll see you next week.
Awesome. Well, thank you very much. Talk to you guys next week.
Later.